Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what do we see now here on the monthly? If we zoom in and look at the most recent price action, we can notice how we have a market which is currently testing a quite strong level of previous monthly resistance, which has now turned support. In fact, from here, all this previous rejection to the downside was created. After that, the market broke above the zone, and that previous resistance was turned support at this level. At the moment, as the market is testing this level from above after having broken it to the upside, with the previous monthly close above the zone, this level is now turned from previous monthly resistance to support, and from here we could expect some bullish price action to be developed, because precisely from here all this previous move to the downside was created. So this is a quite strong level. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the first thing that we have to point out is that this rejection to the upside was very aggressive. And it was very aggressive because the market went all the way down and tested precisely this previous level of weekly demand and support from which all this move to the upside was created, which was tested here with the creation of this overextended M pattern. So we had both a bullish pattern, which is this overextended M. In fact, after the creation of an overextended M pattern, you would expect a rejection to the upside, as I explained many times in these analysis that I make. And the market not only had that pattern, but was also testing previous support. So this rejection to the upside was pretty much expected, and it was very strong. In fact, it was so strong that it also broke above the previous weekly structure. In fact, what we have at this level is the previous weekly high. From here, both these rejections to the downside were created, meaning that this is previous weekly resistance that is now turned support at this level. What we can also notice is that from a pattern standpoint, we have a clear impulse followed by the start of this correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a 0.32 Fibonacci retracement lining up precisely with this previous resistance turn support, creating confluence of support all across this area, which is a quite interesting zone, inside of which we could definitely see some institutional longing, which at that point would further increase the probabilities of a potential rejection higher away from this level. Now, why am I speaking about institutional longing? Because later on, we will go and see exactly what is going on when it comes to the commitment of traders. Now, continuing with our analysis here, going down on the daily time frame, what do we see? Well, the first thing, I definitely did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect first this correction higher, then the creation of this red candle, and then a retest of the red candle. And in fact, that is exactly what the market did. Then we had this massive impulse. I explained all the reasons for which we could expect first this correction and then the continuation higher. And again, after this impulse, I made a full breakdown explaining all the reasons for which we could expect the correction and then the creation of a new daily higher high. And in the very last analysis, I explained all the reasons for which a correction lower was definitely possible. And in fact, that is exactly what the market is currently doing as we speak. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, that it's definitely time to reevaluate the structure that we currently have, as the market has created a move to the downside that we wanted to see. But before we continue with our analysis from a daily perspective, by looking at the technical side of this market, let's first go and see what we have when it comes to the commitment of traders. So what institutions and the big players in the market are doing. Now, the first thing that I want to check here is what is going on gold when it comes to the net positions. In fact, what we can see is that with the last reports, net positions have been increasing quite a bit. We went from having 71.4k net positions all the way up to having 163.4k net positions. Now, what this shows is that institutions are moving their positioning to the bullish side for gold. In fact, if we take a closer look, what we can see is that it's been several reports in a row that we see tens of thousands of longs getting added on the institutional side of the market and shorts getting closed. In fact, we can see here 11,000 longs added and 30,000 shorts getting closed. Again, with the report after that, 20,000 longs getting added and 16,500 shorts getting closed. And with the very last report, we see 9,500 longs added and 4,400 shorts getting closed, reaching a very high 261k longs and only 97k shorts. So institutions are definitely positioning themselves once again very aggressively to the bullish side of gold. Therefore, they do expect a move higher. Now, keeping this in mind and moving back to the daily time frame from a technical perspective, what we can notice is that this market is definitely creating an M pattern. Now, as explained previously, after the creation of an M pattern, what you would expect is a rejection to the upside for the completion of the pattern at the neckline, which is the previous support turned resistance, meaning that here on the daily time frame, what we could expect is a potential reversal to the upside, especially if the market will first continue a bit lower, and then essentially we would expect a move higher for the completion of the pattern at the neckline, which is the previous resistance turned support and the completion zone of the pattern itself. So if we will see a bit more bearish continuation, we could definitely expect then a rejection higher for the completion of this M pattern at the neckline, which is this previous support turned resistance here from a daily standpoint. So since this is definitely an area inside of which institutions could continue to add longs as they have been already doing, that definitely increases the probabilities of the potential completion of this pattern. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the technical side of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down here past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out at transparentfxtrading.com. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.